Over the weekend, the crypto market cooled after an intense rally that pushed Bitcoin to new record highs. At roughly $125,000, Bitcoin faced heavy resistance as traders began to take profits. The move triggered a short-term correction across the market, with Ethereum, Solana, and major altcoins following the same path. Analysts describe the pullback not as panic, but as a natural pause after one of the fastest climbs of the year. In financial markets, rapid rallies often invite profit-taking, especially when long-term holders see opportunities to secure gains. On-chain data shows that large wallets, known as whales, started transferring coins through exchanges around the new all-time high. Those moves tend to signal short-term selling pressure, even in strong uptrends. Despite the drop, overall sentiment remains bullish. Funding rates and inflow data suggest that capital is not exiting crypto, only repositioning. Many traders view corrections like this as healthy resets, removing excess leverage before the next move higher. In Ethereum's case, the price briefly fell below key support near $3,700 before recovering slightly. Volume remained strong, and no major liquidations were reported, indicating controlled selling rather than a panic cascade. Analysts point to ETF inflows, stable staking yields, and continued developer activity as reasons why Ethereum's fundamentals remain solid. For Bitcoin, the key levels to watch this week are the 120,000 and 115,000 zones. If those supports hold, traders expect the market to consolidate before attempting another breakout. If those levels fail, the next strong support sits near 100,000, a psychological threshold where buying interest typically returns. Meanwhile, macro factors continue to influence sentiment. Investors await new inflation data and central bank comments later this week. A dovish policy signal could reignite risk appetite across crypto and equities. A stronger dollar or tighter monetary tone could prolong the correction a bit longer. Technical indicators show that Bitcoin's momentum remains positive on weekly charts, even after the pullback. The relative strength index cooled from overbought conditions, resetting short-term sentiment. In practical terms, that means fewer over-leveraged positions and more room for a sustainable recovery. Ethereum shows a similar pattern, momentum cooling, but trend structure intact. Liquidity remains high, and developers continue to roll out upgrades in preparation for scalability improvements next year. Across the altcoin sector, a few projects saw sharper retracements as speculative capital rotated into stable assets. This pattern has repeated in every major cycle. Money exits smaller tokens first, then re-enters once volatility stabilizes. Long-term investors tend to use these phases to accumulate quality assets at lower prices. The broader message from analysts is clear: short-term pain, long-term structure. Corrections after parabolic runs are not reversals. They are maintenance stops for the engine of the market. The current pullback may last days or weeks, depending on macro signals and ETF inflows. But the long-term narrative around Bitcoin as a store of value and Ethereum as programmable infrastructure remains intact. Both networks continue to attract institutional interest, regulatory clarity, and growing developer ecosystems. That combination supports the argument that this correction is more about positioning than sentiment collapse. For traders, patience and observation matter more now than prediction. Markets breathe in cycles: expansion, contraction, and renewal. The best opportunities often emerge during the quiet stretches between headlines. As always, understanding the structure behind price moves helps separate emotion from strategy. No one can predict the exact bottom or next rally, but watching liquidity, volume, and sentiment gives the clearest signals. This week's focus should remain on stability, not speculation. If inflows resume and supports hold, a steady climb could follow into the next quarter. If volatility increases, it may be another chance for disciplined entries. Either way, the fundamentals of blockchain adoption remain the foundation beneath the price action. Markets can rise and fall, but innovation keeps moving forward. For more insights on Bitcoin, Ethereum, and daily crypto market trends, remember to like, subscribe, and keep learning, here at Crypto in Black and White.